Nope. Hello and welcome to another 30-minute Thursday. My name is Amit. It is 2 p.m. in the wintry Pacific Northwest. Thursday afternoon. We are live on Facebook. Thank you for joining me. I hope everyone's doing great. I hope you guys are staying healthy, staying safe, staying sane. Very important to stay sane in a world that seems a little bit less than sane. And I hope you guys are staying warm because it is cold where I am right now. It's very warm here in the studios of New American Funding. Yes, we made it through the snow event last week. We were working from home because we got snow and we got ice and we got all those things that make winter winter. And that was fun while it lasted. And I'm glad it didn't last too long because while I like to slide on top of it, I do not like to shovel and move it from my driveway. So now we're back and it's winter here. It's winter in the Pacific Northwest. And growing up in Texas, I got to tell you, I absolutely love the winter season because it just feels like the holidays, right? The holidays are coming, whether you celebrate Christmas or whether you celebrate Hanukkah or whether you celebrate something else. The holidays are coming, and that's a really fun feeling for us. And it is especially fun for me because it's cold and because we get to wear sweaters, whether they're ridiculous holiday sweaters inspired by the most tacky and whatever, or they're very nice and subdued sweaters, or you get to wear your scarf, or you get to wear your jackets and your coats, whatever it is. I didn't get it for a large part of my life when I lived in Dallas. And now I get the opportunity to enjoy that in the Pacific Northwest. And so, ho, 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 and a very happy season's greetings to everybody. I want to make note that I am working with my friend and colleague Dana. She's working the cameras here, she's working the screen behind me here. So I don't know. Am I going to this camera? Am I going to this camera? We're still learning. We're still working our way through the situation here. But I want to thank you guys for taking a few moments out of your very busy day to spend a little time with us on Facebook and to learn about something that I find really, really exciting. And I've been promoting this a lot of late because it's a very cool program and I want to share it with you. It's called the Buyer Accepted Program, or BAP for short, BAP. And it's something that's unique to New American Funding. And I want to tell you a little bit about it and a little bit about the history and why I'm so excited about it right now. So if you're a real estate partner, pay attention. This is going to be really important, especially if you're representing either sellers or buyers. So if you're a real estate broker, those are pretty much your two clients. They're either buying a home or selling a home, or in some cases, buying a home and then selling a home. And that's where this program really comes into focus. The way it started was, if we go in the Wayback Machine to last year or even the year before, when the market was completely different. Real estate partners, do you remember what it was like to write offer after offer, escalating above asking price, waiving inspection contingencies and waiving financing contingencies, and releasing earnest money non-refundable to the sellers, and hoping against hope that your offer, which was 15% above the asking price, would be the one that the sellers actually selected. That was not that long ago, about a year ago. And in that time, we had a lot of buyers that were struggling to compete because they maybe didn't have 20% down payment, or maybe they didn't have all cash to buy a new home. And so the Buyer Accepted program was born at that time to help buyers become cash buyers. And so what would happen is they would come to someone like me at New American Funding, a loan originator. They would get pre-underwritten, fully pre-approved, go through the entire process. And then when they went shopping, Buyer Accepted, our affiliate organization, would buy the home on their behalf, pay cash, and then sell it back to them. That was the way this program started out. And when the market changes, and I keep telling you guys, this market's going to change. If you read my newsletter, my weekly mortgage market minute update, you know that this market is going to change. At the very least, you know that I'm telling you that this market is going to change, and that will. Maybe next year, maybe in 2024, but at some point in time, we're going to go back to a lower interest rate environment. And when that happens, we're going to see a lot of the buyers that have been hibernating in this winter time right now, that have been kind of dormant. They're going to come out and they're going to start shopping again aggressively. And a program like this could be very useful for some of those folks so that they could be cash buyers while at the same time not having all the cash sitting in their bank account. So that's how this thing started. But the market changed on us, and that's okay. Change is a constant. And guess what? Now we have an opportunity to kind of repurpose this thing and use the same program in a slightly different way. How does that work, and in what slightly different way? Let me share with you. Every day, it seems like I get somebody calling me asking if I can do a bridge loan for them or if I can do a loan for them so that they can buy their new home before they sell their old home. This is something that we all have kind of like, I want my cake and eat it too. I want to be able to buy something, move into it in my own time without, having all this craziness and then sell the old home and be done with it. I don't want to move twice. I don't want to move into a short-term rental. I don't want to put all my stuff in storage. I get it. I'm just like you guys. And the last time I moved, by the way, uh, we did a contingent offer. That was in 2016. Slightly different market than we found ourselves in 2020 or 2021 or even 2022. But I did. I was able to do a contingent offer. And let me tell you, those are not as easy as it sounds, even though the seller at that time was amenable and agreeable. And we wrote an offer to buy the home that we currently live in. And we promised that seller that within 5 calendar days, our current home, our old home, if you would, was going to be on the market. We were not ready to get that home on the market. Y'all have no idea what it's like to try to get a home ready to be on the market within 5 days. You think that's an easy process. It is not. And we were ill prepared for it. And we struggled and we did the best we could. We had a lot of help. We had a lot of resources and we got it done. Obviously, we got it done, but it's not as easy as it sounds. And it's not suddenly like, oh yeah, 1, 2, 3, and it's a jiffy. My wife deserves a medal. Actually, she deserves a national holiday named after her, but that's another story altogether. In any event, there's a lot of people now that want to do what we did 6 years ago with a contingent offer. And I want to tell you that the BAP, buyer accepted program, can be a better alternative for those of you that want to do this. Whether you're representing sellers, whether you're representing buyers, if you're a real estate broker and you get somebody that says to you, hey, I want to buy a house before I sell a house, call me. If you are a person, a real estate buyer who wants to buy a house before you sell a house, and you're not yet working with a real estate broker, call me. My information is on the screen. Dana's going to put it back on there later on. So don't worry, you'll get my information. My phone number is on the internet. So yikes. But yes, call me for any of these things. But let me explain to you how this works. Let us for a moment imagine that you are a real estate broker and you have a listing, meaning that you represent the seller and you've got a home on the market that buyers are visiting with an eye to purchase. I'll tell you that a year ago, that was like having gold in a wheelbarrow. It was that fast. I mean, the moment you listed it for sale, there were people throwing offers at you, trying to get that home off the market before the competition became really fierce. Things have changed. And now homes are sitting on the market and there aren't as many buyers that are interested. And they're certainly not throwing crazy money at anything. It's got to be priced right. I think we all know this. But nonetheless, you've got a home, it's listed for sale on the market. Along comes a person who's interested in buying that home. And they say to you, hey, will you take an offer contingent on the sale of my current home? That's when you need to call me. What I would tell that buyer is maybe we can talk to the seller about that, but I have a lending partner at New American Funding who does this program that may be able to eliminate the need for a contingent offer. A contingent offer, just so that we get all the jargon out of the way, is an offer that is based on the client, the buyer, selling their current home before buying the new home. So the new home sale is contingent on the old home being sold. And that's a process. That is not a simple thing. So how does BAP work? Well, as soon as the listing broker, that's the broker representing the seller, has somebody that says to them, hey, I want to write a contingent offer, they should call me. Y'all should call me before that, but you're not going to. I get it. You're going to call me when it becomes pressing. And at that moment, I'm going to start talking to the buyer, the intended purchaser of this home. And we're going to get them fully underwritten, meaning that I'm going to get a loan application. We're going to run their credit. We're going to get their tax returns. I'm going to get their bank statements. I'm going to get their pay stubs. My underwriting team's going to look at it every which way necessary to make sure that they are fully good to go. That's step number one. At the same time, the real estate broker that they're working with, that's the buyer's agent, is probably going to be helping them sell their current home whenever this transaction ends. So that real estate broker needs to get us what's known as a market analysis for the value of their current home, as well as a net proceeds sheet, basically a little worksheet that says, hey, if you sell your house for this much money, this is how much you can get at the very end. This is what you can expect your proceeds after sales costs, after taxes, of course, after all the commissions are paid. This is what, and after your loan is paid off, this is what you're going to take home when we sell your current house. So that is step number one. I do fully underwritten and we get fully approved on the departing residents. Here's the catch, real estate partners. I'm going deep into the weeds here so that y'all can follow along. The current home, the buyer has to have at least 30% equity in that property. So what does that mean in real math? Let's say the home is worth $1 million and they owe 650,000 on it. Guess what? That's 35% equity. We're in business. Something in that order, 30% or more. Okay, so that's step number one. You're fully approved as a buyer to work with New American Funding for financing, as well as buyer accepted for the purchase. Step number two, there is a contract written to buy the subject property. Real estate partners, that would be your listing, basically. There is a contract written. That contract is between your sellers and buyer accepted as the purchaser. That contract is basically, the terms of that contract are agreed upon by our client, the final buyer, and buyer accepted. So if the client wants to pay, I'm just throwing numbers out there, $500,000 for the purchase, and they want to close in 45 days, and they want to have an inspection contingency, so on and so forth, all of those terms are put into the contract that buyer accepted presents to the seller. So everything is already on the table. As soon as the seller accepts the offer, within 48 hours, within 2 days, buyer accepted enters into a second contract with the eventual buyer, with the person who wants to buy this home from buyer accepted. That contract is basically going to be a mirror image of the first one with a minor exception. And I'll explain what that exception is in a moment. But now we've got two contracts, one between buyer accepted and the seller, and one between buyer accepted and the buyer. Now, everything proceeds as typical real estate happens. There's an inspection. If there's one in the contract, there's an inspection. There's an inspection response. If the buyer wants to negotiate a credit from the seller as based on the inspection results, all of that stuff happens just like any traditional purchase deal happens. It just gets discussed or just gets negotiated by the buyer through our affiliate buyer accepted. That's kind of the go-between. When do we close? We close anytime after the buyer lists their current home for sale. That's the catch. They don't have to sell it yet, but they do have to have it listed on the market. So I've got a friend right now whose in-laws found a home. They want to buy that home and they want to buy it later because they're currently living in a home and they want to celebrate one more Christmas holiday with their family in their home. So they wrote an offer to the sellers through buyer accepted that said, hey, we're going to close on January 12th. We're going to close this purchase. That gives them all of December to enjoy the holidays, to spend one more season with their family, to get their home ready to hit the market. On January 10th, their current home, where they're spending their last Christmas, is going to hit the market. And on January 12th, buyer accepted is going to close escrow on the purchase of that new subject property. That's how that happens. And when buyer accepted does that, by the way, they're going to buy for cash. So when an offer is written from buyer accepted to purchase that home, part of that offer is not a pre-approval letter from me. It's a financial statement or an asset statement showing that buyer accepted has the cash on hand ready to pay. What's the maximum purchase price on one of these deals? $2 million. That's a lot of money. That is a very, very generous sort of platform that we can work through for a lot of different properties here. Now, there's more homes that are more expensive here. I get that, but that's a pretty big platform. So, buyer accepted, the moment the departing residence is listed for sale, anytime after that, buyer accepted will close on the purchase of the subject property of the new home. They'll pay cash. And now the client, that's the original buyer, gets to move in as a renter. There's a rent back schedule, and I'll show you that schedule in just a moment. But the client, the buyer, is now renting their home from buyer accepted. They get to move in. They get to paint the walls. They get to unpack. They get to hang their artwork. It's their home at that point, and they're living there. While they're living there, their current home is on the market for sale, and they don't have to be disturbed by showings. They don't have to be disturbed by open houses. They don't have to worry about all the things keeping the home neat and tidy. I know what it's like to live in a home that's also listed for sale on the market. That is not a pleasure. I assure you, you got to keep that thing clean. You got to keep it like it's a museum. And they don't have to go through that because they are already moved into their new home. And they will be paying rent on that new home, but they're not paying it out of pocket just yet. It goes on a ledger, on an accounting ledger, and they'll pay for it at the very end of this transaction. So now everything's kind of moving. And as soon as the old home is sold, they get an offer and they sell it. At that point, we have one last transaction. That's the contract between the buyer and buyer accepted. At that point, we either do a mortgage, use some of the proceeds from the sale of the old home for the down payment, and I finance the rest. Or if there's enough cash, they can pay cash and buy it from buyer accepted. The other part of that is that they're going to pay the rent that was deferred. They're going to pay it at that time. And so Dana's going to show you a slide of what that rent looks like. It's a predetermined amount. And if you want to know how much it really is, you should send me an email. I will send you that because it's probably a little bit hard to read on the screen, but I'll give you for instance, on a $500,000 purchase, it's $3,000 a month in rent, which is pretty agreeable if you think about it. Now, people push back. I've talked to a lot of people over the weeks about this program, and people have pushed back and said, well, hey, there's some risk here. Like, well, gosh, okay, there's risk in everything we do, but let's talk about some of the elements of risk here. Let me shift myself. Okay, we got 10 minutes. We're good. Let's talk about some of the elements of risk here. Element number one, when you write a contingent offer, real estate partners, you can get kicked out of that at any time. You realize that, right? The sellers can come up and say, hey, we're calling this offer, and you've got 5 days or fewer to basically to get your act together, or the contract's dead. This is not that. Buyer accepted already owns the home. They're renting it to our client. So they're not going to tell them to move out or whatnot. The risk of the client selling their departing residence, that's on buyer accepted and on the client. But real estate partners, you guys get your commissions when the first transaction closes. So for example, when buyer accepted buys the home from the seller, that's when the sellers get their money, the listing brokers get their money, the sales office gets their commission. Everybody on that side of the transaction is all compensated. That deal is closed. the client moves in and they're paying rent. Now, if they went the other way and they bought the old home, I'm sorry, they bought the new home and they still owned the old home, guess what? Now they're paying mortgages on both of those homes. Buyer accepted, a little bit different. They're still paying the mortgage on the old home because they still got to make that payment, but there's rent that is being charged but not collected from buyer accepted. That rent is collected when the old home is sold and when the clients are cash rich because suddenly they just took all the proceeds from the sale of their old home. Now they can pay that rent. Now they could pay the down payment and we do a mortgage for them. And it's a traditional same mortgage as I would be doing if we didn't go through this program. So it's really a very effective way to bridge the gap between I own my home right now that I need to sell and I'm going to buy this new one, but I got to figure out how to get it done in between. Buyer accepted program helps get it done in between. I know what you guys are thinking. I know you guys are thinking there's got to be a catch. There's got to be a cost. Well, of course, there's a cost. Let me tell you what that cost is. 2.8% of the original purchase price. So, once again, if we're talking about a $500,000 purchase price, buyer accepted is going to sell it to the ultimate client for $514,000. Why? Two reasons. Number one, there's the excise tax. 1.8% goes back to the county. When buyer accepted buys this home from the seller, buyer accepted actually takes title. And as a result of that, when they sell it to the buyer at the end of this transaction, buyer accepted is going to get hit by the county for the excise tax, 1.8%. They're going to pass that cost on to the ultimate buyer. So that's 1.8%. The other 1% is buyer accepted needs to make money as well. They've got people that work there. It's an organization. They've got to pay their bills just like everybody else. And so that's where that money goes. Now, here's the cool thing. We're in a market right now where buyers can actually negotiate with sellers and where sellers are willing to make concessions to buyers. They're willing to pay closing costs. They're willing to reduce the sales price. They're willing to buy down the interest rate. You know what else they're willing to do? Pay 2.8% for buyer acceptance fees. So we can negotiate that into the contract. When buyer accepted purchases the home from the sellers, we can negotiate that fee and it gets passed through buyer accepted to the ultimate buyer onto the second contract. So there's a lot of ways to get around some of these less than perfect circumstances. Now, yes, there's some moving parts. Yes, there's a few things that we have to figure out along the way. Yes, it's not a one-step process, it's a five-step process. I get all that. But guys, we're talking about transacting a bunch of real estate here. And we're talking about finding solutions in a world that is less than perfect right now. And in fact, every market I've been in has been less than perfect. We talked about the market that inspired buyer accepted in the first place. You know why it came up? Because it was a less than perfect market. Because we had buyers that were struggling to compete with all cash offers, that were struggling to compete with massive down payments. And here they are with their 10% down or even less. And so buyer accepted was born out of that necessity. And now we got a different necessity because guess what? Change is a constant. And so now the markets have changed, but you know what still remains the same? People still want to buy the first home or the new home before they sell the old home. And that is the constant sort of thing that runs through a lot of these things. And having done this myself, like I said, we did it in November of 2016. And I will tell you, even if it works out great, it's still messy. It's still complicated. It's still inconvenient to have to live in a home that's being shown as an active listing. There's so many moving parts to that. This is a different way of getting from point A to point B, and it's a way that kind of eliminates a lot of this difficulty for the buyers and eliminates a lot of the difficulty for the sellers. Think about it from the seller's perspective. If you're selling a home and you take an offer contingent on the sale of another home, you're stuck until they sell that other home. You do it with buyer accepted, you're not stuck until they sell that home. We can close the moment the old home is listed for sale on the market. It goes on the MLS. The very next day, we can close for cash on your listing. That's a very, very cool outcome. And so I've been talking to a lot of people about this. I wanted to talk with you guys about this. I promoted it on Facebook earlier this week. I actually put a video of myself juggling. Yes, I'm a juggling clown sometimes. I learned how to juggle in college, not very well. I wouldn't trust myself with chainsaws, but I'm trying to get as many people out here to know what's going on with this program because there's so many cool things we can do, and so many people are looking for an opportunity right now to buy the new home before they sell the old home. Let's take a look. We've got less than 5 minutes left. So I want to take this time before, as I'm wrapping up, to encourage everybody to give me a call or send me an email. Dana, please. There you go. She's awesome. Dana, you rock. Thank you so much. That's my contact information back there. Y'all know how to find me. Please, if you're watching this, if you're listening to me drone on and you want to talk about actual deals, want to talk about actual clients, you have a listing, you have a buyer, you have a would-be seller, whoever it is, whatever it is, up to $2 million. And guess what? We can do this in multiple states. So I got a buyer that wants to sell their home in Seattle and buy a home in Dallas. We can do this program. There's a lot of cool stuff we could do here with this. So I want to encourage you guys first and foremost to either call me or email me because there's a lot of moving parts and I want you to understand it and I want to explain it to you and I want to answer your questions. Beyond that, I want to thank you guys for spending another half an hour with me. It's amazing how fast time flies. I really appreciate you guys hanging out with me, chatting with me, listening to me drone on, and your comments after the video are always really helpful. I thank you for that. I want to invite you to join me next week when we're going to talk about something else. It's going to be something cool. But next week is going to be the 15th. Guess what? The Federal Reserve Board meets on the 14th. So we've got some stuff to talk about next week as well. Fed related, what's going on with the economy, what's going on with interest rates, and we'll definitely cover that stuff. But between now and then, I want to thank you guys for spending a little bit of time. I want to wish you a wonderful day, a great rest of the week. Stay warm, stay safe, stay healthy, stay sane. And please, please, please call me until I see you next time. Thank you so much. Y'all take care. Peace. Be well. Bye-bye.